Good morning, everybody. It's Friday, December 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up a penny and a quarter at 436 and a quarter. March soybeans were up 2.5 at 1001 and a half, and March Chicago wheat was up a penny and a quarter at 559 and a half. No export sales announcement to speak of here this morning. We did have non-farm payrolls were out. They were up 227,000 for the month. That was a little better than estimates. We're looking for 214,000. So pretty good non-farm payroll data there. Had the stock market's up 85 right now. Unemployment rate did edge a little bit higher. It's up to 4.2%, but that still was in line within expectations. So, Dustin, maybe a few thoughts here to kick us off to end the week here. We'll put a bow on it. And then we'll throw it around the room.
Yeah, thanks, Dan. I think we're still closely following the real. Yesterday we were higher, and we tied that contract low in the D's 25 corn contract, and then posted the highest we've had in a couple of days. So it's a good sign. I think that we just have to be really careful. What the market may be telling us going into the new year. It could be a number of things. Is it that demand is front loaded? Is it that crop size is not as big as it was originally expected? Or is it that many growers just haven't come to the market yet, right? Because that could be the later. If there's a lot of corn, if there's a wall of corn that's coming January, February, March to turn into cash to make get ready for loan renewal season, then it could be first one to sell kind of gets ahead of that line. That's what happened last year. I'm not necessarily predicting that. I just when you think about old crop corn, you've had recently March has been trading slight premium to D's. I think that's in part because the real has pushed all prices lower, and growers are obviously not very happy with this price right now. It's a below cost of production price for the average grower. But we still need to turn it into cash. Eventually, this still needs to move. And if it's delay, and then everyone comes to the market at the same time, we could see things like happened last Feb or last August. And anyone that's curious about what that looks like, just go look at the September contract in the month of August. You look at the September to December spread, went to full carry during delivery. That was the experience last year, and we're still capable of still setting that up for old crop contracts. So that'd be my main highlight is just be wary of that potential. Now the first two things are still on the table too, right? It could be that demand simply is that strong right now, or the crop size is not as large as we expect, and that's part of the reason why we're not meeting that demand that we're seeing. But I would just kind of insulate yourself and make sure that you're ready for whatever, because it could be a bumpy ride in the next couple of months.
Yeah, Justin, give us a few thoughts to wrap up greens for the week here.
Yeah, I don't disagree with what Dustin's saying. I mean, if we talked about yesterday. I mean, I think if you look at flat price in general, corn, wheat, soybean oil, some of these things look pretty cheap, I think, compared to the world fundamentals. So, yeah, that's a good question. I think where's the biggest risk? It's probably in March through July corn at some point here. Now. We are going to be probably competitive until the safrinha crop comes fully online. So Dustin's point about, are we front loaded, or is this just going to be a big export year for U.S. corn? I don't know the answer to that. It's interesting that we've done this much business with such a strong dollar relative to other currencies. So maybe we're just at a really, really good value area. But as far as the, nearby corn versus new crop corn, if we're at a really good value area here with record production, then why is next year's corn discounted? You would think that there'd be a premium there because we still have to actually grow it. And you have, certain government support programs that aren't too far away from here. There's just not a lot of incentive for, D's 25 corn to be sold, in my opinion, here or lower. So, yeah, it's a very interesting dynamic, and we've talked about this a lot on the show. All the different reasons, and the real, and prices that the Canadian farmer, the South American farmer is getting relatively better prices than we are, just because of currencies. So that could explain some of the weakness back there for sure. But yeah, in general, I'm not a huge bear at these prices. Not saying that it can't go lower, obviously, but I'm not seeing the big incentive to get overly aggressive here.
Very good. Anybody else? Anything to add on the grain side? All right, Ryland, we were kind of bumped into some technical selling yesterday in cattle, and it was pretty light volume and non-eventful in the hogs. So why don't you wrap us up in the cattle for the week?
Yeah, no, it just looked like we saw a little bit of liquidation, as cash trade started to pick up. So 180, 189 to 190 in Texas. I want to say the low side is a little bit on the disappointing side. We saw some 295, 297 for dress in Nebraska, and right around 297 in Iowa. So overall, just kind of feels like the market's starting to soften up a little bit here. Beef prices were also lower. Box beef and choice was down 49 cents. Select was down 60. So a little bit of weakness. So overall, saw some liquidation. I mean, open interest was down 2,400 contracts. So it just kind of feels like maybe the market's perspective starting to shift a little bit with this lower cash. So I don't know if that's going to be the trend right now, if the Packers are going to try to keep supporting it over the next several weeks, but it does kind of feel like there is always that kind of risk. You get into that holiday season, things could lighten up a little bit. So I think we saw a little bit of an emotional reaction to that yesterday. And yeah, just choppy kind of inside trade as far as hogs go. There was a little bit of liquidation there too. Open interest was down 930. And we're starting to kind of gravitate a little bit closer to some of these more significant moving averages. 25-day coming in at 85.60, and then the 50-day below that at 84.40. So I mean, just kind of feels like we've got that front loaded demand. And right now, I mean, you look at the weekly exports, I mean, demand has been nothing but strong here right now. So it feels like that's going to be the underlying kind of support at these levels, but we are starting to see cash prices drift lower, carcass prices drift lower. Bellies were down 325 yesterday, hams down $1.77. So, it's going to create a little bit of caution, especially with the managed money super long this market, record long. There could be a lot of blood in the water if all of a sudden things start to turn. So we'll see how it goes. I don't know if that's going to be the way it plays out for, into this weekend, but I think that will start becoming more and more of a concern if we can't just find a little bit more stability on the cash and the cutout.
Very good. Appreciate the update there. It is Friday, so that brings us to the most exciting part of the week. Brian's Fun Fact Friday. What do you got for us, Brian?
Yeah, thanks, Dan. Man, the dates just keep falling off the calendar. I felt we just did Black Friday yesterday. So originally my research went into the Army-Navy game, but I realized that will be next Saturday's play. So stay tuned for next Friday for that little Friday fun fact. So, which led me down the road of World War II, since tomorrow marks the 83rd bombing of Pearl Harbor. After the bombing of Pearl Harbor, Lytle Adams, a dental surgeon and an acquaintance of Eleanor Roosevelt, sent a proposal, Project X-Ray, to the White House. He was infatuated with bats going into the caverns of New Mexico. So he wanted to use bat bombs to attack Tokyo. Not bath bombs, Ryland. I know how you like to end your day with a nice bath bomb, but bat.
I mean, who wouldn't?
So the original thing was that, so the Air Force took it over, the White House approved it. So knowing that Tokyo was made all out of wood, the idea was to capture all these bats, put them into like a hibernation state, tie the little incendiary bombs to them, put them into canisters. So it'd be about 1,000 bats per canister, drop them out of the plane, and the doors would open and all these bats would go into like find dark places, and the detonators would go off 15 minutes later and start fires all throughout Tokyo. So the testing began, and testing didn't go so well. I don't know if they were in hibernation state still. A lot of them just fell to the ground to their death, or just, it blew up in the middle of the air. So that continued, trying to find more ways to do it. And after spending $2 million, $34 million, today's money, the project was canceled. The history books were not rewritten. And as you know how World War II ended there. So thought that was an interesting take on World War II. I never heard of it, so I don't know if that was new for all you guys as well.
Pretty wild.
The best.
Tell you what, how far R&D has come. Huh?
Yeah, right?
Yeah,
Who was the guy that thought of that one?
Doge needed to be around then too.
Yes.
Yeah.
Very true.
We've been blowing money since World War II. Huh?
Yeah.
Yeah, the bat bomb.
Very good. Thanks for that, Brian. That was a good one.
Yep.
A couple of things I want to point out. Next week, on Wednesday, December 11th, we're going to have a couple of webinars, 10 o'clock Central, reserved for AgYield clients. Specifically, we're going to go through government programs and crop insurance here for 25. We got some really interesting thoughts. We got a couple of guests there that we're going to visit with and talk about a plan there for 25. So be sure to register for that. And then also same day, December 11th at 12 o'clock Central, open to everybody. We're going to discuss financial services roadmap to 25. Got a couple of guests in the lending side and in the financial services space, just talking about, what 25 looks like, how to be prepared, and what you can do right now to get ahead of the game. So be sure to click the link in the description there, get yourself settled in and subscribe to the page, and we'll keep you updated on all the newest things that are going on with AgYield. So we appreciate everybody that tunes in on a daily basis. Throw us a like or subscribe. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there today, guys. It was a good show. Hope everybody has a great weekend, and we'll talk to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.